Venkatraman, Managing Director of IIFL, joins us live to talk about markets. Venkat, good to have you back on ET Now. Thank you for joining us. Venkat, what do you want to start with? Global cues or local setup?
Good morning. And I think the markets will now be driven more by local cues because we are entering into this earnings season. And as you know, the month of October will be seeing second quarter number announced by all Indian companies. And it looks, at least from the ground, that the numbers will not be so good. So as of now, I think the markets is clearly waiting to see a cue from the result seasons. And having said that, I think in the preceding month, which is the month of September, we had two big events. One was the entire view from across the seas on the US quant easing. And that fortunately played into the market's hands because that was a positive surprise when everybody was expecting a huge tapering effect. And the second was the new RBI governor's credit policy, where actually he failed to play up to the market's expectations and announced a 25 basis point hike. So more or less from now going into this busy season will be much more driven by results and earnings. And unfortunately, the earnings numbers should not be all that great. So we would be making some kind of bottom in this quarter, if at all.
Venkat, but some would argue that locally all the bad news is in the price. The fact that economy is contracting, Q2 numbers will be bad, growth will remain anemic. That's yesterday's story. That is not tomorrow's trend. Tomorrow's trend is that we have an economic bottom in place and now things are looking up.
Actually, I take what you are saying in the sense that everything that could have gone wrong has actually gone wrong. But let me put things in a perspective. Nobody can predict the market, and as you have also been talking in your own channel, the markets have now become extremely volatile. One day of good numbers, you see a market going up by 700 points, and next day a disappointment, market falls another 500 points. So we are going through a period of what we call as a quote unquote a reset. So there are three big resets which are taking place in the markets right now. The first one was the exchange, and now clearly the reset has happened. The rupee dollar rate, which was earlier pegged at the 50 to 55 band, is now shifted by 10 rupees and now gone to the 60 to 65 or 60 to 67, whichever number you are feeling comfortable with. The second reset, which was supposed to take place, is on the interest rates, and that unfortunately has not taken place because there was a huge euphoria when the new governor took place that he will start giving at least signaling that interest rates will start coming off, and that unfortunately has not taken place, and we are now getting used to a high interest rate regime, primarily linked to inflation, and so long as inflation does not come under control, interest rates will remain at these levels. And third is what we call as a policy reset. Unfortunately, policy reset is beyond anybody's control, and that is more to do with the next elections will take place any time from now to May 2014. So we believe that unless we get a clear signal on the interest rates, which should effectively show signs of softening, or we have a policy reset to get a new government in place and which takes steps to kickstart the economy, we will be in this kind of quote unquote a dragging or a market. So the bad news are most of the bad news is in the market, but unfortunately, there is nothing to kick the market up. So we will be in a trading market, a volatile market, without any clear signs of upward move.
So as a house then, Venkat, what is it that you are recommending as a fresh buy or something that you are at least recommending holding and staying put with sectorally or stock specific wise?
If you look at the way the market is currently structured, I think we are seeing two clear baskets in the market. There is a huge premium for quality. There are stocks which are trading at multi-year highs and showing absolutely no signs of correction whatsoever. You have the FMCG pack, which everybody is talking about imminent slowdown, and still the stocks continue to trade at high levels. So what is happening in this market is it is extremely difficult for somebody to go and stick a neck out and say, okay, buy FMCG stocks at these levels. But obviously, if you are holding on to FMCG stocks, we are recommending clients to continue holding, because clearly there is a premium for quality. There is some kind of lesser impact of the slowdown on these stocks, so as to put. So we are asking our investors to hold on to FMCG stocks. Second thing is the two sectors which should clearly benefit from the rupee depreciation, which is IT and pharma. So we are recommending investors to hold on or look for a buying opportunity in these two sectors. So clearly these are the three baskets of stocks which investors can go out and invest into, or if you're holding on to it, continue holding them.
A word on banks, Venkat. Is one better off now buying State Bank of India, which offers a lot of value, or one should still stick to HDFC and Kotak Mahindra Bank, which offer no value?
Clearly, I think in banking space, we think that this entire story of the deteriorating asset quality is yet to play out. And second thing is that they are going to get hit by this entire impact of the higher interest rates. So at this point in time, it is very difficult to take a call out, because as you pointed out, all the PSU banks are already quoting at below book or significantly below book. I would say that we have a neutral view on the banks, and one should wait and see the economic cycle pick up and some improvement in asset quality, and third, interest rate moving southwards before increasing bets into the banking space.
Venkat, good chatting with you. Really appreciate you taking the time out and joining us this morning.